Hello, everyone. I hope you have your tea, coffee if you prefer. I definitely have mine. Mine's in a little travel Contigo mug today. But today, what I'd like to talk to you about is HST and GST. So, what that means is GST is goods and services tax, and HST is harmonized sales tax. So, the difference between the two is the GST is the federal tax, and the HST is for certain provinces. There's actually 5 within Canada that have it, and those 5 are the Ontario, New Brunswick, Newfoundland and Labrador, PEI, and Nova Scotia. So that means that there's a blend of GST and the provincial sales tax, but you typically see it as one line on your sales invoices, but sometimes you'll see it as two. Just that's the way that it works. Then there are all the territories within the country, as well as Alberta, just have GST, and then the other provinces, BC, Saskatchewan, Manitoba, what they have is they have a separate GST and PST. But today, oh sorry, and Quebec. I forgot about Quebec. Quebec has QST. I don't do a lot with Quebec, which is why I sort of forgot about them. I'm sorry about that for anyone in Quebec. But the way that GST works is that on certain goods and services, and there's quite a few, there are a few exempt and zero rated ones. But for most goods and services, what you need to do is charge GST or HST. So the rules for both GST and HST are that once you've hit $30,000 in revenue or sales, not income, but revenue or sales, you need to register for GST or HST, depending on your province and where you're selling. So when you do that, you register with the federal government. You get a GST number, which would be the same as your business number if you've already got that. It's a 9-digit number. And then you start charging the GST or the HST. When it comes time to report on that, and this is why you need your accounting to be, up to date and make sure that you split everything out, what you do is you have what's called ITCs, or input tax credits. So if you've spent $1,000 in GST, but you've collected $2,000, then you're going to owe the federal government $1,000. If it's switched and you've only collected $1,000 of GST or HST, and you've paid out $2,000 in the reporting period, then you're going to get a refund of $1,000. So one of the reasons why, I get asked this question a lot is, why am I going to want to register if I don't have $30,000 of sales? And usually that's within like 12 consecutive months. So it's not the calendar year or anything like that. If from say June to, June of the next year, if you've got $30,000, then you're still going to have to register. And you also need your accounting up to date for that, because if you don't know what your sales are at for the 12 consecutive months, you could get in trouble because you haven't registered. But there's a couple of reasons why you may want to, decide to register early. Like when I started my business, I actually registered for GST right off the hop. I knew that I was going to be hitting that $30,000 sales, and I didn't want to come back to my clients after I'd been in business for a while and say, hey, listen, I know this is what you've been paying, but now you've got to, start paying for GST on top of that. So, that's not fair to my clients. Get them used to paying what they need to be paying and the sales taxes. So it showed some legitimacy in my company, right? That I was going to be here for a while. I wasn't just a company that's starting up and is going to take off, and I'm, not going to be around for very long. I mean, that comes into play. I know I'm an accountant and my background is business, but if I'm looking at a company and all of a sudden they're not charging me sales tax, I start to wonder why. Is it a what I call a fly-by-night company, a company that's going to be around for 3-4 months, and then all of a sudden they're going to take off on me? So just it gives some legitimacy, and like I said too, is if it can actually make you look a little bit bigger than you are, right? Because you've got now sales taxes, so people have they have no idea what you're making, but it can make you look like you're a bigger business. The other thing is, a lot of times when you're starting up a business, depending on what it is you have a lot of startup expenses. So if there's GST in that, you can actually get, from a cash flow perspective, you can get those ITCs, remember those input tax credits, returned to you when you do your filings. So it can help with your cash flow because you spent all of this money and now you get it back from the federal government when you do your filings. So if you have any questions, please comment below, reach out to me. anything like that. If you're watching this in my Facebook group, right, we can have a bigger discussion on this. But this is just a very quick, overview of what GST and HST is. And of course, for every business, depending on what your product or service is, there's going to be certain rules around it and whether or not you have to charge it or not. So I hope you've enjoyed this. If you have questions, please let me know.